Are you ready for a doomsday recession? Because some bears think we could drop by 65%, which really means they have a doomsday recession mentality. And this must be difficult because the moves off the April lows have been strong. So these bears are thrashing from a 65% market crash to an imminent recession. Here's some big bears. All right, we're going to talk about doom and gloom. Let's do it. All right, here's your doom. John Hussman, a 65% market crash wouldn't be surprising. Why? It's the Great Depression, everybody. Yay! All right, now let's go to gloom. So doom is bad, gloom is just kind of bad. Let's see what other bears have to say. Gary Schilling, recession by end of the year means a 30% market plunge. Cool. All right, BCA, a recession in 2025 will cause a 30% drop. So they're just debating on whether it's this year or next year. David Rosenberg, the U.S. is growing potential for a hard landing in the economy. They're sleepwalking into recession. Note that word recession because we're going to come back and talk about it in a moment. Where some see doom and gloom, others see hope. Let's look at the other side of the coin now. Here's a really interesting article where NVIDIA rivals gold as a shield against inflation. This will be particularly important because on Wednesday they report earnings and we're expecting a 5% beat. So is Jensen going to be our Lord and Savior? Well, we're going to find out. Whoa. That's just one company. What about the S&P 499 or the rest of the S&P 500? Well, let's read the other part of this headline here. A doomsday recession mentality is keeping the S&P 500 strong. 500 strong. Companies are ready for a recession that never seems to come. And they're putting in their best earning surprises going back to 2022. Oh, we talked about this on May 11th, where Wall Street is sending bullish signals for the S&P 500 earnings. Let's look at some images. S&P 500 companies continue to outpace expectations. All right, here's an even simpler image. Year-over-year expectations going into this year, into next year. Hey, we're going up. Well, of course, that's bearish. Whoa. But what about the rest of the world, right? U.S. exceptionalism is one thing, but what about the rest of the world? Well, Germany is probably already in recession. Why? Because they've not been very strong. All right, well, the charts have got to be down then, right? Nope. All-time highs for Germany. Whoa. They even went into all-time highs before the U.S. So what's happening here? Well, their companies were probably ready for recession, as we talked about before. So just because recession might come doesn't mean charts have to go down. I know that sounds so difficult, but bear with me and I'll explain more. China was definitely in recession, but now they're coming to the rescue. They're going to go burr. They're going to print money. They want their lines to go up. So what if it really is 1995, where we talked about this pattern of 1, 2, 3, 4, and then an incredible move higher? Well, this would mean that potentially we could be on our way for a 220% rally after going to new highs. 1, 2, 3, 4, 5-step recipe. We'll go through that in a minute. Just bear with me because I got a few more things to get through. So Jerome Powell is worried, but look at the headline here. Relief for the Fed. Core CPI cools. Okay. And we're going to talk about CPI more in a minute here, but softer inflation seen boosting odds of a Fed interest rate cut. Okay, this is looking better. Sounds a lot like Goldilocks for the Fed and for the market. Why? Well, because both are moving higher. So this is cautiously optimistic here. And now my mouse isn't working. So there we go, right? Jerome's like, all right, job's done. Nothing else to see here. Whoa. But retail just can't seem to believe it. They're flip-flopping just like me and my thumbnail. So short, long. Now they're right back to short here. All right. Just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing a thumbs up and subscribing to the channel, I would greatly appreciate that. So some retail traders just can't seem to help themselves, right? They're flip-flopping all the time. And here's a nice little quote here from Greg Ryan Fitness. Here's my takeaway from his comment. I'd rather be right than make money. Mansplaining perma bear. So even if recession comes and all these things he's worried about, pause the video if you want to see them. Man, he just seems like the average person who has no idea what he's doing. He's been watching my channel for years. I've never seen him make a bullish comment, and he's trying to time the market. I'd rather listen to people who are successful like Warren Buffett. Don't time the market. Why? It doesn't work. All right, let's put that into practice here. The stock market is a device for transferring money from the impatient to the patient. Let's look at a chart here. Why? Well, let's see what happened. If I'm right, we go up by 220%. Then we drop by 50, but from where we started, we're still 60% higher. What? That's right. Let's go through this one more time here. So we go up, by 220%. Then we dropped by 50. But if you did nothing, you were patient, like Warren Buffett said, you got 60% more money. So yes, the bears were eventually right that a crash came. But before that crash came, man, we went up massively. So it's okay to be wrong, but it's not okay to stay wrong. And if in doubt, be patient. It's gonna pay off for you. All right. So this really comes down to whether you're going to regret buying and it goes lower or not buying and it goes higher. Some people just want to be bears. They always see the cup half empty. That's that doom and gloom crew. Well, I just showed you that, hey, maybe it is 1995. Maybe it isn't. What I do know is blue skies are bullish. And unless we get more technical feedback, a bearish theory is just a theory. When I look to the odds or the stats, hey, 86% chance or 100% chance, hey, that's pretty good. I like that. So 86% chance we're higher 6 months out, 12 months out, 100. So yeah, we can definitely go down after, but do you want to be on the wrong side, losing out on all the potential? I don't, which is why I talked about that if we reclaim 525, it was likely just a dip or a trap. We're back up at new all-time highs, which is bullish, right? Bullish. So think about this. If the last thing we have to worry about is NVIDIA on the 23rd, and that's going to be the highest implied volatility move for this week, after that, there's not much to worry about till we get to June. And the market's only at 65 fear and greed. It could push up into extreme greed. The market could go even higher. Like we're going to show you here in a minute where, just look, number one, we get a bounce, right? We get a downtrend to the 50 MA. Same thing happened here in 2020s. All right. Number two, hit the 50 MA. Number two, hit the 50 MA. Number three, get close to that 50. Number three, get close to the 50. Number four, get a downtrend. Number four, get a downtrend. And then we break it to go to new all-time highs. And I want you to pay attention to this pattern here because at the end of the show, I'm going to go through and actually explain how this actually updates relative to what I laid out at the end of last year. But let's finish telling the story first here. All right. So here's something I find really interesting. There's important economic data for the US, notably the FOMC meeting minutes on Wednesday. I think we just got to wait and see what those are. Was everybody in consensus or were there dissents? But look here to Great Britain. On Wednesday at 2 a.m., we're going to get a CPI print, which is basically at 2%. That's the Fed's target. The Fed is jelly. Jerome wishes he had that. And look here. We heard about this in May. The Bank of England is moving closer to a first rate cut since 2020. That could happen in June. That's next month. Oh, and Jerome wouldn't be first. But look what the biggest asset manager is saying here. Rick Ryder manages $2.5 trillion. BlackRock has $9 trillion. Yes, a contrarian take on inflation and Fed rate increases. 2% target might be tougher as affluent Americans reap higher yields. What does that mean? It means he wants the Fed to reverse course, slash rates to tame inflation. What the hell? Exactly, right? Whoa, this guy's smarter than me. Here's another guy smarter than me, Mohammed El-Arian. He sees that the 2% inflation target is totally arbitrary. And he talks about how going from 3% to 2%, it might not be worth the effort. We're already seeing some damage here. Look at delinquency rates. They're starting to go a little bit higher. And rich people are unaffected by higher yields. They get paid to save money. While the people who don't have money, low income, they're cutting back on all spending, travel, restaurants, general merchandise. Rich people are cutting back like a sliver of 1%, but they're spending more on travel, more on restaurants, more on general merchandise. So that's really what Rick Ryder's saying is that, hey, if you remove this interest rate for people saving who have all this cash, it's going to start to actually help the people on the bottom half and disincentivize the people on the top who have more money to spend. And this might actually not break the system if we stop it soon enough. Okay, here's another way of thinking about it. El-Arian says Fed's higher for longer rates U-turn is at odds with the market. It's totally arbitrary. And the real economy, not inflation, will force the Fed to pivot, he says. All right. Well, what are companies telling us? Mentions of recession on earnings and conference calls among the S&P hit the lowest level since 2022. Oh, this sounds like a Goldilocks report for the Fed and for markets. Sounds like that to me. Ha, ha, ha. Gotcha, bears. You guys are trapped, right? So in the title of the video, I said how to prepare. Well, just make sure you're getting evidence for your theory, because if it's 1995, you are going to be so butthurt when we get to the end of this rally. In the 1995 soft landing, the Fed cut once, then held for 3 meetings. The cuts were going to be slow, but not necessarily steady. This is from months ago. This is from March 29th. What's the progress been? Well, let's look here to the interest rate. Down, sideways, a little bit down, back up. There's your big crash. We talked about that. The market went straight up by 220%. Then it dropped by 50. We're starting from a higher area than we started here. Here's 1995. There's your bear market. We went higher, double bottom higher. Oh, that seems like awfully simple. It should be simple. I like simple stories. Some bears just want to latch on to anything bearish just for the sake of it. So here's the part I wanted to finish off on. I told you what proves me wrong. A monthly lower low closing below the low, which we did get. I mentioned that I wanted to see a second candle to confirm a potential trend change, which we have not seen. So now let's go here back to this pattern because I want to really make sure you understand this. I'm not saying I have 100% confidence in this pattern, but hey, the saying is that history does not repeat itself, but it often rhymes. Just tell me whether or not this looks similar enough. Number one, we get lows that connect a downtrend and we get a bounce on the 50. Number two, bounce on the 50. All right, number three, get close to the 50, but don't quite hit it. All right. And we're not at all-time highs on that third test, by the way. All right. It's exactly what happened here. That's why we have a downtrend, just like now. Then what happens? Well, we break the downtrend, and we just broke the downtrend. Now what I want to do is zoom into this recent period because I'm looking to this one candle right here, which has that lower low, and I'm really wondering whether or not that was just a trap, right? Did the bulls get me? Not really, because what I say in a video is very different than how I manage my portfolio. But let's look here. All right, so if I would have just taken what I said here of a monthly lower low closing below the low, but then that's a piece of evidence. What's confirmation? A second candle closing below the low. Did that happen in 1995 in this entire rally? There's one time close below the low. There's one close below the low. There's no succession. There's not two in a row. So I see one right here. I see one right here. I see one right here. And that's it. I don't see any other times close below low right here. So eventually, when we get closer to the high than not, let me actually just undo this. Let me zoom back out because I just want to make sure I'm just doing this live right now. If all we do is just follow my template, again, not that I'm Nostradamus, I know the future, but let's just pretend we waited for something that proves me wrong, but then for confirmation. Well, that would have came right here. One close below the low. Let's look right here. So one close below the low. Where am I here? One right here, two right there. That's it. That's where I would have said, all right, I'm no longer confident. Hey, we participated on like 80% of the rally. We hold on for this whole period right here. And then we start to get a little bit more defensive. What happens? Well, we don't go up anymore. We're really going sideways. Then we go down. That seemed like it would have worked out like a charm. Yes, that seems like it would have worked out like a charm. Oh, is it really that easy? Well, I think it is. So if you find yourself having a doomsday recession mentality, please make sure you remember you need to see technical feedback. Otherwise, you're probably wrong. So look at Germany. You would have said, oh my God, recession's here. You wouldn't have made any money. You would have got your butt handed to you. Now let's do one more thing here because I do want to go to NVDA. I want to look here to a weekly chart. I think it's this one here, 1 week chart, because we were talking about the hollow candle expansion on NVDA, NVIDIA, right? Because they report earnings this next week. But look what's happened here. Every single week, close over the candle high, over the candle high, over that candle high, which means this is an expansion again, just like the last time. And until we get a close below the previous candle high, looks like NVIDIA might want to go to new all-time highs. This is the most important company right now, but it's not the only one. So with that said, thank you so much for tuning in. You can click on the video on the left or subscribe on the right to hang out with me at 9:15 and 9:30 on Monday. Thank you very much for tuning in.